What is going on, everybody? Welcome back to Gig Nation. It is a little bit of a dark, gloomy day here in Seattle, and that's about appropriate for this video because we're looking at a rideshare company that has completely disappeared as of today. So the rideshare industry has really been shaken up lately. Uber and Lyft have been laying off a ton of employees. They've been doing a ton of stuff to cut rates for drivers, which has really had a negative impact, all for the sake of the bottom line. And as we're seeing all of this hardship in the industry, we've actually seen a company completely close its doors today, and that's Juno. It was an NYC-based company. It was a really ambitious startup. Juno basically wanted to compete with Lyft and Uber by treating their drivers better. So it was a cool message for drivers. It was something that a lot of drivers wanted to get on board with. I remember back in the day, like 4 or 5 years ago, actually signing up on the wait list to see if they ever expanded to get on board driving with them, and they never actually expanded outside of NYC. But what they were able to do is get acquired by the company Get. It's a ride-sharing company that's more international. They're owned by Volkswagen. They're a huge company, and Volkswagen basically wanted to get its foot into the door to the US markets. So they acquired Juno for $250 million in 2017. And 2017 was really a different time for the rideshare industry. People had much different expectations for basically what the industry was going to turn into, and a lot of the profitability, parts of it were being overlooked. But now that we're seeing Lyft and Uber as public companies, things are definitely changing, and in a lot of ways for the worse. It's definitely stuff that we don't like to see. We don't like to see all of the driver rate cuts kind of speeding up and growing in different markets. So what does this mean for the rideshare industry as a whole? Well, it's actually good news for Lyft. Lyft just signed an exclusive deal with Get to operate in NYC. Basically, Lyft's already there. Get wants to, continue to provide its service. So when users on the Get platform are in NYC, they will now be taking rides through the Lyft platform. And this is huge news for Lyft. This is a good strategic partnership for them. And kind of what we're seeing here is just more consolidation in the industry as we continue to see these companies struggle to try and make a profit. So what does this mean for the rideshare industry as a whole? Well, it doesn't really mean a whole lot. We're likely not going to see a whole lot of new competitors enter into this industry, and some of the smaller ones, some of the weaker ones, maybe Trip, for example, might not continue to exist in the years to come. But as these companies continue to look for profitability, we have seen some improvements actually with Lyft and Uber in their recent earnings statements. Basically what they did was beat Wall Street estimates. So not a lot of profitability to be seen, still losses on an earnings per share basis, but not as bad of losses as we were expecting. So what these companies are now trying to do is basically pinpoint a time far out in the future when they say they'll be able to become profitable, maybe like 2 years out, and just put it far enough out of reach so that investors don't hold them too closely, and then continue to grow and expand. But we've actually seen slightly different strategies from Uber and Lyft. Lyft is kind of trying to focus more just on being that transportation network, just on offering rides through vehicles, while Uber continues to kind of expand. They still have the Uber Eats platform, and they're doing a lot of things to kind of keep their hands into different baskets and basically become this global tech platform that does so many different things. And we're gonna kind of have to sit back and watch and see which one of these strategies works best, because Lyft seems to really be focusing here, and Uber seems to be focusing less and just trying to get that growth, trying to continue to grow and achieve more scale, more number of users, and more different marketplaces. We're seeing some interesting ideas come out of Uber. They now want to enter the jobs market and start acquiring users to basically help these staffing companies find workers. So it seems like there's some synergy here already on their platform because they have all of these drivers, independent contractors, and maybe there's some carryover to people that want to do other types of work. But a lot of analysts don't actually expect this to have much of an impact on Uber's bottom line. So, a ton of shakeup in the gig economy as a whole. We saw Grubhub really get slashed a few weeks ago because they're not able to keep their users on their platform. I think we're going to see more of this to come. I think there's really going to be some interesting stuff coming up as far as what it means to be a user on these different platforms. I actually want to do a video about it because I think that there's a lot of people just opening up multiple accounts on Grubhub and DoorDash to try and get the best deals, whatever active promotions are available. And so I think that their user base is significantly smaller than what they're claiming. But I'll get into that in a future video. For now, let me know what you think. Is Juno closing down really a big deal? Obviously, it doesn't impact drivers or passengers outside of NYC, but is this showing us something bigger about the gig economy and about rideshare? And if you enjoyed this video, make sure to hit that like button and subscribe to the channel.